Well, sticking with the theme of the program today, we are joined in the studio, as you said, by the Group's Managing Director of First Bank, Mr. Bisi Onasanya. Thank you so much for coming on to the program.
Thank you, Wole. Right. It's my pleasure.
Like I mentioned, we are looking at banking in Africa today and the Nigerian perspective. Can you just give us your thoughts on your assessment of how Nigerian banks have fared over the last 50 years, more so because we are celebrating independence this Friday?
Well, congratulations, Nigeria, at 50. The banking industry has moved tremendously from what it was 50 years ago, when you had banks, a couple of banks predominantly run by the colonial masters. What you have today are strong banks that are essentially manned by Nigerians and who have become critical factors to the development of the Nigerian economy that you cannot ignore, and who are also in a position not just to deal with the banking issues in Nigeria, but are also able to interact very freely with the rest of the world, even when they need to work and partner with them to raise funding from external sources to finance Nigeria. So it's been a very, very good journey for us. It has also brought up a number of individual and local entrepreneurs which were not supported at that point in time by the colonial bank. Yes. So I would say it's been a long journey, but the Nigerian banking system has come up. It's still at the elementary stages. There are so many things that still need to be done, but we've moved on.
Now let's look at, obviously we're still in the reform mode in Nigeria. I mean, everyone knows obviously the rescued banks, last year. And now we have a new bank licensing regime with the holding company structure being proposed by the central bank. How do you see the industry landscape changing with all this?
It's a revolutionary move by the central bank, and I think it is commendable. The whole essence of that reform is to ring-fence the bank shareholders' funds from being used for all sorts of things which happened in the past. Now, you set up a bank, and you probably put in 25 billion naira to set up a bank, but that gives you license to take deposits up to 1 trillion naira. I have 1 trillion naira deposit base, simply because I have, not for me, First Bank is bigger, but for an institution that has only 25 billion naira capital dealing with 1 trillion naira of other people's money. So you've got to be able to ring fence that bank and make sure that the bank's funds are not used to gamble or for things that are speculative. So the whole essence of the new regime from CBN is to make sure that if you want to go into other areas other than banking, you cannot use the bank's funds or depositors' funds to do it. You've got to raise the capital at the holding company level to deal with those issues. And I think it will go a long way in solving the perennial problem that we have, which were just discovered by the new CBN regime going forward. So I think we should applaud it.
Well, I mean, some people have some question marks and would take issues with the central bank on that. But let's look at the impact that we've seen with the reforms which we've seen recently. Loan growth has slowed down significantly. I mean, the central bank governor last week at the MPC did note that loans have dropped by 1% year to date to the private sector. Even for First Bank, we did see that loans seems to be flat from year to date. What's your thoughts about how lending will change going into 2011?
Well, let me correct the impression that banks are not lending. Banks are lending, and I can confirm that First Bank, if other banks are not lending, we are lending and will continue to lend because the liquidity is there. What is important is, let's go back to why we are where we are today. We were lending to the capital market for margin facilities. The artificial transactions and the artificial profits from the capital market dovetailed into transactions in the real estate market. So banks were lending to that sector also. And then thirdly, we were lending for the downstream sector of the oil and gas. What has happened is that with the correction of the problems in the capital market, so you had prices in the capital market going up at rates that were not proportionate with the fundamentals of the stocks. For me, they were artificial transactions. What has happened is that if the CBN had not come in at that particular point in time, we wouldn't even be talking of the banking system today. You just probably have a few, maybe a couple of banks who are still standing. We had problems, and we have to admit. So we needed to correct that. Now, with every corrective action, when you go through that phase, it's normal that you go back to the basics and pick up again which is what is happening today. We continue to lend, but the only issue is that as you learn from the experiences of that particular era and the corrections that have come in place, it is normal that you tighten your risk acceptance criteria and make sure that every single credit that you sign off on is a good credit that has a payback you can see going forward. What happened in the past was that loans were going to individuals and related parties. That has to stop. You cannot continue to run a banking institution along that line. So I think it's a good thing that that intervention came in from the central bank. It was just a question of time. You would have seen a major problem in the banking
But very
sector.
quickly, so you expect loans to improve next year?
Like I said, things have have changed. By the time we release our third quarter results, you see some growth in our loan book. Beyond that also, I can tell you the number of loans that we are booking today. By the time you see our full year-end result, you see a significant growth in our loan book in line with our projections.
Okay, I'm quickly running out of time here, but I want to touch on the Pan-African strategy for First Bank in particular. I know that obviously several Nigerian banks have very strong presence in West Africa. What is First Bank looking to do in that regard?
Let me tell you, as a matter of fact, that the reason for going outside Nigeria for First Bank is not because it is fad to do so, or because some other banks have done so. If you learn from those who have done so, they are not making money and does not fit strategically into their strategic vision. But for us, we want to follow our customers. We want to make sure that wherever our customers go to, we follow them. We want to make sure that where Nigeria trades with, we follow them. We have a new Pan-African strategy that says in the next 1 year, we would move to 4 carefully chosen and analyzed African markets. And as I speak with you today, we already are analyzing some markets in which we want to move into on a calculated basis, not because it is fat to do so, but because it fits very well into our strategy. Let me speak about ETI here because people keep asking about ETI. ETI cannot be a Pan-African bank when it is not strong in Nigeria. So we want to make sure that we consolidate our hold on the Nigerian market, and we've done well. As I speak today, First Bank is already 1.25 times bigger than the next bank. It's just that we are quiet about it. When we consolidate on the Nigerian market, it becomes clear that the only bank that ETI will partner with, if it wants to remain relevant and dominant in Africa, is got to be First Bank.
Unfortunately,